Hello, let's look at rent income received in advance. An income such as rent is usually received monthly in cash, either at the beginning of the month or at the end of immediate preceding month. The income is recognized on the day of the receipt by debiting the bank account and crediting the rent income account. It can, however, occur that the lessee pays the lease installment for a specific month in advance. The lease installment received in advance represents an item that satisfies the definition and recognition criteria of a liability. In accounting, this liability is referred to as rent income received in advance. The rent income received in advance has to be recognized as a liability by debiting the rent income account and crediting the account rent income received in advance. Now let's look at the example. On 20th of August 2007, AC Entity entered into a lease agreement to rent out part of their property at 40,000 per month as from 1st of September 2007. The first lease installment is on 1st of September, whereafter the lease installments are receivable in advance every month on the 27th of the preceding month. AC Entity's current reporting period ends on 31st of December. The rent income will contain the following entries on 31st of December 2007. Firstly, is the first installment that was paid on 1st of September of 40,000. But remember, the lease agreement stated that the rent is always receivable on the 27th of the preceding month. So the rent for October was paid on 27th of September. The rent for November was paid on 27th of October. The rent for December was paid on 27th of November, which means the rent for January 2008, the following period, was paid on 27th of December. Now, the rent income received for the current period starts from September, the current period, up until January 2008, which is part of the next period. But the rent income that relates to the current period is only from September, October, November, December. Remember, January is in the following reporting period. So January forms part of the following reporting period. So rent income was received in advance for this. This is a liability because the tenant hasn't utilized the property yet, but they've already paid for it. So to recognize this, you will need to debit rent income to decrease the income for the current period. Though we receive the money, but that amount of 40,000 does not form part of the current reporting period. So you need to decrease rent income account. So debit rent income and credit the liability, which is rent income received in advance. Now, what happens in 2008? Remember, this rent that was received in advance in 2007, December 27, now forms part of the reporting period of 2008. So in 2008, the rent that was received in advance, it's no longer a liability. It must be turned into an income. So what do we do to reverse what we've done in 2008? We need to do a journal entry. That journal entry would be to debit rent income received in advance. By debiting the rent income received in advance, you are closing off the liability that was created in 31st of December 2007. And then credit rent income to move the liability part of rent that was received in advance to become an income account. As per the definition of income, it increases in economic benefits during the reporting period. Now, this is the reporting period where you are seeing the increases in economic benefit.